What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down everything that happened today, as PPI was hotter than expected, but in the beginning the market did not care, and we did get a bit of a fake out rally to start off the day. Now the market could have kept going because of market maker manipulation, but we ended up seeing some very big nuances. Firstly, Tesla did have this big announcement about a recall. I want to clarify a couple of things about it first, but that did cause Tesla to slow down a bit, and that did actually affect many other big ETFs out there. And then all of a sudden, we had a lot of Fed speakers come, and Bullard came out and caused the whole market to come down even harder because he mentioned the Fed could give us a 50 basis point rate hike in the future. So I'm going to break down what all of this means for tomorrow, what happened today, as today was, in my opinion, a very, very crazy day, what the data is telling us about Tesla, and once again, what my price prediction is for tomorrow. Now, before I break anything down about it, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each valued at up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just 12 days. Make sure you check it out before they run out. With that out of the way, let's get on with the video. So what happened today in the markets? Why did the markets end up actually gapping down a bit and then seeing a rally? To start us off, inflation is a lot hotter, a lot higher than what the market needs it to be, than what the Fed needs it to be. Inflation is still high. There is still a very sticky inflationary problem here in America, and the Fed needs to take action ASAP. So what does this mean for the stock market? Well, even though inflation is hot, I mentioned to everyone, when you look at the options chain, because we have OPEX tomorrow, we have a big amount of puts expiring, also lots of calls tomorrow. The market makers have been manipulating the stock market by propping the prices up, right? This is quite artificial. And what happened was, yes, inflation was hot, and typically the market would crash on these high inflation readings. Instead, when PPI came out, the market gapped down. Then we saw a rally. Tesla actually broke above 215 as I predicted. And then what happened was we ended up actually slowly selling off. And I mentioned this yesterday as well. I predicted that Tesla would see a bit of a sell-off and close somewhat red. We ended up selling off even more than I expected because of other factors. So I'm going to break down today for you guys. Let's break down some numbers. PPI, just remember it as it's basically like CPI, except it's on the producer side. This is the producer price index. It's a major inflationary measure. It tends to not be as big to the markets as CPI, but it still is very important. PPI, which is the big inflationary measure, we should have seen a month-over-month growth of about 0.4%. Instead, it was 0.7%, so almost twice as high as what we wanted it to be. That is actually pretty significant. And then on top of that, we had some building data, which wasn't as big. Then we got the core PPI month-over-month that came out. We wanted it to be 0.3%. That's the month-over-month increase from the producer side of inflation. Instead, it was 0.5%, so almost twice as high as what we wanted it to be. Inflation is still hot. The jobs market is also still hot. Initial jobless claims came out at 194,000. We wanted this to be 200,000. What this means is the jobs market is not getting as many people filing for unemployment as we want. The jobs market is still relatively strong. Right? Is it extremely strong? Not necessarily, but it's stronger than what we want it to be. This is once again incentivizing the Fed to be hawkish. And on top of that, then we had more PPI data. We had PPI year over year. We wanted it to be 5.4%. Guess what it was? 6%. That is a lot higher than what we expected. That is not good. Core should have been 4.9%. We actually got 5.4%. So once again, it's very likely we're going to see a second wave of hot inflation. Inflation is not out of the way. As many economists note, it's a very, very sticky thing. Inflation is sticky. It does not just like come down instantly. I did mention this in other videos, and we're seeing signs that no, we're not in a very clear disinflation period. It's more like inflation's going to tick up and the Fed has more work to do before we do start to see a more clear disinflationary path. There's still more work to be done. The Fed still has to be hawkish. Despite these bad numbers, the stock market began to rally. Once again, that's very ironic. It still happened. Tesla did break above 215. I mentioned to everyone we had a bullish structure on Tesla, and my target was about 220. I thought Tesla could try to get to 220, and we ended up stopping at 217, right? Which is completely fine. But I also mentioned to everyone this could be a fake out and we might see Tesla start to bleed. I mentioned that my target was about a close that's somewhat red, maybe a little below 209. We ended up bleeding even more than that, right? That's what's very important. So now let me break down some news affecting Tesla and then break down what on earth the Fed said that caused the sell off at the end of the day. When it comes to Tesla, we have some good news. President Joe Biden has praised Elon Musk for the promise to open 7,500 Tesla chargers to other EVs. I do consider this good news because it is showing that Tesla is still making deals, whether it's with the government or many other individuals. And it's good news technically. It still is good news because just Tesla is expanding their business. They're actually growing and growing and growing on a daily basis. They're opening their chargers so that it's going to help build a lot more revenue and produce even better earnings going forward, especially during times like these. Because of the fact that earnings are key for a company's growth, and more revenue is what Tesla needs. The energy sector has been a growing part of Tesla's revenue, and it is going to continue to grow. So seeing Elon Musk maintaining the same words of a work like this and helping Tesla qualify for more subsidies and etc., I consider that a very, very awesome thing for the company from a business standpoint. Now, we were hit with some bad news, but I want to clarify this for you guys. Tesla recalls 362,758 vehicles. It says that the full self-driving beta software may cause crashes. Now, let's actually take a step back. When cars have recalls, they tend to be a lot more serious in a way because of the fact that people would have to go to the dealers and they'd have to fix the issues themselves. This is actually going to be fixed with an over-the-air software update. So it's a different kind of recall in a way. It's not your typical one. And this is why you could argue that this is exaggerated to some degree. But at the same time, this is a very serious problem in my opinion. And this is why it's very important that Tesla investors are aware of this. So the National Highway Traffic Safety Administration, or the NHTSA, they came out and they said, hey, we're testing the Teslas and we have a big problem. They basically said that the full self-driving beta is unsafe around intersections. It does not make complete stops at stop signs. And also, it doesn't necessarily follow traffic safety laws perfectly, right? And they mentioned that this could be very bad for everyday people. It could lead to more crashes, more accidents, and they demand Tesla to fix this. And as a result, Tesla is going to be doing an over-the-air software update to fix the issue to help avoid many different things. And I want to note that this is super important because a lot of people don't even trust the full self-driving technology, at least as of right now. And I believe Tesla has to do what's best for the company. So the beta is still a beta, right? It's not perfected, which is why Tesla has to keep working on it. But news like this is not good for the company. It's going to lead to a lot of people turning their eyes away, becoming more doubtful. So that's the reason why there's going to be some shift in sentiment for Tesla. This could lead to an increased sell-off. Now, on top of that, Tesla is also heavily impacted by the overall market. The market was still holding up in the beginning of the day until the last couple of hours where we suddenly got a big sell-off and Tesla went from being down like 1.5 to 2% all the way down to almost 6%. That's because Bullard from the Fed came out and he ended up saying something the market did not want to hear. He said the Fed funds rate needs to be at about 5.375% as soon as possible or higher. He mentioned that a 50 basis point rate hike is very, very possible. He did advocate for it, meaning that the Fed might give us a 50 basis point hike, and the market has not priced that in yet. The market was thinking when Jerome Powell was talking, oh, we're seeing disinflation, right? Inflation is cooling off. Things are improving so much. Well, the data is telling us that inflation is actually still hot. There's a lot of work that has to be done, and the odds of the Fed pivoting this year have decreased. Technically, there's no guarantee they will. It really depends on economic statuses and etc. But the odds of them giving us a straight up pivot have decreased for the year, and the Fed still has to tighten and remain restrictive, and that in turn is going to slow down the markets. Now, I also want to note that for Tesla, there are about 971,000 puts out of the money for Friday. I think a lot of the shorts are not going to like this, and they're going to try to make more money by shorting Tesla and bringing it down. The same thing could be said about SPY. Now, I mentioned to you guys initially that SPY does have a tendency of closing around max pain. Max pain for tomorrow is at 405. But I want to say this because now sentiment in the market is starting to shift. How is it shifting? Well, the answer is the Fed has become more hawkish, and a lot of people are not necessarily buying to the same degree. This means that the bears are gaining more strength. I actually noticed a lot of put sweep orders right before Bullard was speaking, and a lot of these institutions are expecting the market to come down a bit. So if I were a big bear, I'm going to try to bring the market down now. There are 3 million puts out of the money. I don't like that. I'm going to try to bring more of them in the money. The market likely has some downside to come. For Tesla, one thing that's not good is the volume is still high. We're dropping on high volume, but a lot of this volume did come in the beginning as Tesla was pumping in the very beginning. But at the end of the day, it did maintain, and we still saw lots of heavy selling. Now, on top of that, the short volume percentage, this thing might increase a little bit, meaning that the short side is gaining the edge over the stock, and we might see an increase in shorting. Tesla was outperforming the market. It did underperform today. And I do believe there is a little bit more downside to come. Tesla tends to be red 48% of the time on Fridays, and we do tend to slow down in the beginning of the days. On the red days, we tend to see consistent red days with small bounces here and there. It tends to not be like the green days where we're slow in the beginning, then we, increase in volume over time. It's a little different. And as far as short interest goes, we have a crazy increase in Tesla's short interest. Tesla had about, let me see, we had about 22 million, 23 million shares shorted on the 13th of February. It increased to about 33 million. So we saw tens of millions of Tesla shares shorted. There's no guarantee all of them have covered. And because of Tesla's high short interest, many of the shorts might try to continue to pile in and drag Tesla down. So I want to warn everyone about that as much as I can. For SPY, if you're bullish, you have to watch 410. Then we have some resistance around this line, around 411 or so. Then there's the 412 to 413 area. Then there's 416. I do think the market's going to bounce a little bit because we are oversold. We're heavily oversold. And we might try to see SPY reclaim 410, push up a bit. But I do believe the bulls are going to be weaker and the market's going to slowly come down again. I also believe that we're going to break below 408 and we're going to see the market come down to this 405 area, maybe even lower. As for something like Meta, Meta has a more downside to come in my opinion. It's still on this nice downtrend. There's a big gap that's unfilled, likely going to continue with the downside. Microsoft as well. Microsoft did fill the gap. That's something I mentioned yesterday. It's going to likely continue with the downside. Apple, in my opinion, she might try to bounce, try to get back above this 154 area, but it might not be very strong. And if Apple fails, then we have the 152 target followed by 150. If Apple does fail and it starts coming down, that could drag the whole market down. It could also slow down SPY and potentially even Tesla to some degree because it affects the selling pressure. For the triple Q, in my opinion, it is oversold. I think it might try to bounce and try to get above 305, but it might fail and end up coming all the way back down to 300 very, very soon. The VIX is starting to pop again. It's back above the falling wedge it was in. The VIX looks like it wants to keep going. This is a bearish signal for the stock market. For the dollar index, this thing is continuing to show some nice strength. The MACD is still wide open. This is telling me that the dollar is going to slowly climb and climb and climb its way up to 105, bearish for the stock market overall, typically. Now, the market would have come down earlier, but the market makers manipulated it, so it's taking a lot longer than before. And once again, I don't think they could avoid it. I think the market will cool off a bit from this point after what the Fed just said. So please be ready for it. The 10-year Treasury yield is continuing to climb, once again bearish. So please, please, please be very cautious during times like these. What do I see for Tesla? 200 is everything. Technically, it's about 198 to 200, but mainly 200 is everything. Why? Because Tesla is going to try to fight and hold for 200. If it fails at 200, okay, the bearish possibility would be if 200 doesn't hold, it's going to come all the way down to 194. If that doesn't hold, the major demand zone has been between 189 to 187. It could retest that area. That's the bearish possibility. For the bullish possibility, I know it's unlikely, but I just want to mention it. Watch 205 as resistance. Break above that, then there's 209. Break above that, then there's the 215 to 217 range. That is actually a supply zone as of right now. So what's my point? Yes, as traders, be prepared for anything, but the most likely possibility I'm seeing is more downside for Tesla. I believe Tesla's going to fight for this 200 area, and it's likely going to fail and come all the way down to 193. 193 tends to not hold it as well, so the very important level is going to be this 189 to 187 zone. If it does test it, watch for a bounce around there. It's very likely it's going to happen. I can't promise it, but it is still very, very likely. Now, what else is worth noting is Tesla has actually bounced off that 189 to 187 many times over the last 2 weeks, and we've been shopping around a bit. Got a nice push up, but I do believe there is a little bit more downside to come. So please be prepared for anything. My prediction, however, would be Tesla fighting for about this 200 area. If it fails, which I believe it most likely will, we first might try to bounce off of it a little bit. So we could bounce in the morning every now and then, but then I do think Tesla's going to have some more relative weakness because of the whole recall news and also because of the Fed. And I think the market's going to contribute to bringing this thing down to this 193 area. There's no guarantee it's going to hold there because we tend to not bounce around there. We tend to bounce more between 189 to 187, more towards like 187. And we might see Tesla try to hold that and then close somewhere in the 190s. Maybe the mid 190s, maybe a little lower. So that's essentially what I'm seeing. Anyways, I want to keep this video not too long. I just wanted to make all of this very clear for everyone to please watch your technical indicators very carefully, and please be ready for tomorrow. It's going to be a very, very important day. Tesla to the moon, because the long-term future is still incredibly bright, and peace out.